Having correct financial statements is so important, and most people would say, well, I reconciled to the bank account statement, so they must be correct. But I'm going to give you 4 or 5 tips to go a little deeper into this and make sure that the accounting records and the statements that you're getting are truly accurate and correct. Number 1, take your balance sheet out. If you haven't seen your balance sheet, it's there. Go find your balance sheet, print it out, and look for negative numbers in the column of figures on the right side of your balance sheet. If your balance sheet has any number that is negative, be suspect of that number. There are only a couple of categories of numbers on balance sheets that are supposed to be negative. Depreciation, amortization, and owner equity can sometimes go negative. But if you see negatives after car loans or bank accounts or credit cards or any other asset or liability, you probably have a problem in your accounting system. So your books in general would not be correct if there are negative signs on your balance sheet. Number 2, does your AR match the details of your AR? So on your balance sheet, accounts receivable is a value, right? My customers owe me $10,200. I should be able to go in and find the individual invoices that add up to a total of $10,200. In other words, the detail should match the general posting or the category balance. Make sure that that's true of both accounts receivable and likewise accounts payable. Anything that has what we call a subledger should be reconciled to make sure that the general ledger matches the subledger detail. Let's see, is the bank account reconciled? We already talked about that's a really easy one, but don't forget that there are lots of kinds of bank accounts, not just checking, but also savings, credit cards, loans, investments that you've made. Do you have an account with stocks or bonds in it? Those sorts of accounts should be reconciled as well. Next is, are there uncleared checks in your checking account? You might write a check in January that still hasn't cleared the bank in December. And if so, you've got a real problem. You need to go in there and delete those uncleared checks and either reissue them to the person to whom you first wrote it, or, get this, send that money to the state, Secretary of State. Boy, that's painful to do, but it's the law that says if I wrote a check to John and John didn't cash it in 6 months, I have to either try again to give it to John, and if I can't find him, I now have to give the money to the Secretary of State to be held, and 6 months from now, the Secretary of State's going to publish a list in the newspaper and try to find John, but they're going to hold it forever until John comes to claim it from the state. That money is not yours. So we're getting back to the accuracy of your books. Uncleared checks can be a real problem. Make sure you take care of them. Next is, are you accounting for your debt payments correctly? So if you have, let's say, a car loan, part of your car loan repayment is the principal on that loan, part of it is the interest. Are you separating those two things and capturing the interest as an expense on your income statement? You should be. It's going to affect your profitability. It's going to affect your taxes. So be careful that you're accounting for your debt payments, your loan repayments correctly. Last, I'm going to say, is the equity accounts. At the bottom of your balance sheet, you'll see the equity balances. This tells you how much each owner has contributed, how much each owner has taken out of the company, and what your net income, historical net income, has been for the life of your business and for the current year by itself. Make sure that those 4 are correct. In particular, the ownership equity accounts need to be really tightly screwed down. You've got to know that John put in $50,000 and David put in $50,000, and that is accounted for correctly within the equity section of your balance sheet, and that money didn't get counted as revenue or something else incorrectly. So those are some good tips to make sure that your books are done correctly and accurately. Follow them through. I think you'll have a much better feeling about your numbers. You'll be able to rely on your numbers when you know that you've done those 4 or 5 steps.